Good morning, everyone, and thank you for joining us today for our CII Digital webcast with Flaxman's Partners. I'm Carly Knights, Professional Development Manager at the Chartered Insurance Institute, and I'd like to welcome you all to our session today on the Insurance Act 2015 and the Missing Link of Enquiry. We have with us online today Roger Flaxman, Chairman and Principal Consultant, and Michael Wilson, Director at Flaxman Partners, who I'm sure a lot of you attending this webinar will already know this duo. Now, I'm going to leave Roger to give a quick introduction to what the webinar is about in more detail, but I will let you know that there is some time for questions at the end of the presentation, so do feel free to use the question box you can see on your screen, and we'll work through these once the webcast is complete. Now, any questions that we are unable to get to, we'll endeavour to answer these for you as well in due course. But I won't take up any more of the duo's time. So without further ado, I'll hand over to Roger and Michael. Thank you.
Good morning, everyone. And I'm Roger Flaxman, and with me is Michael Wilson. And I'm sure that probably 95% of you now will know exactly who we are and what we do. There is probably nothing more alarming for a policyholder than to find a claim turned down because they've failed to tell the insurer something that the insurer says was a material circumstance or material fact, as we often say. But as insurance professionals, we all know that what constitutes a material circumstance or fact depends entirely on the unique circumstances of every insured or proposer for insurance. Now, the Act requires the proposer to make a fair presentation of the risk. And we'll talk about this later a little bit, but summarily, a fair presentation of the risk is one which makes the disclosure in a manner which would be reasonably clear and accessible to a prudent insurer. The question is, what is the proposer to understand by a prudent insurer? Now, there has been plenty of legal examination of what constitutes a prudent insurer. But in a nutshell, and this is not a legal definition, this is my definition, it means an insurer who is not reckless in the course of their underwriting roles and responsibilities, i.e. somebody that takes their underwriting seriously. And most people do, let's face it, but that's what we're looking at, a prudent insurer. Now, the principle that the Act is aiming to achieve is to require the proposer to tell the prudent underwriter everything about the risk that would affect the underwriter's decision to accept it and on what terms, or to decline it. But the golden question is, what is in the mind of a prudent underwriter, and how does a proposer ever know what it is? It's one of those things that you learn when you give evidence in court, which Michael and I have done for quite a long time now. One of the things that you're not permitted to do is to say what you think somebody else was thinking or doing at a time. In other words, the court will say, well, how can you know, Mr. Flaxman, what's in the mind of Mr. Jones? So if it holds good for the court, you could argue that it holds good before they go to court. And what would an underwriter have in his mind about a risk? It depends on the underwriter, it depends on the risk. What would the proposer think that an underwriter has in his mind about the risk? Who knows? It depends who the proposer is. Now, this is a huge gap, and it's a huge, huge problem. And it was one of the things that the Act was trying to address, because what it's trying to say is that it's aiming to achieve that the proposer is trying to focus the proposer's mind. Now, to focus his mind, fundamentally, traditionally, insurers have asked questions, because questions do focus the mind of the proposer. And generally, they will invite honest and full disclosure. But if fewer questions are asked, or in some of the cases we see, no questions other than the name and the address and the revised sums insured for the ensuing year of insurance, that happens more often than you might think, then where does the proposer start to understand what is required of them to make a fair presentation. And does the insurer have any responsibility to ask questions if they do not understand the fair presentation that has been submitted for a quotation? Now, this is the focus of today's webinar, and we're going to try to reserve some 20 minutes at the end of it so that you can ask questions, because we rather think that the most valuable part of the webinar is your ability to do just that and to talk about it. So, Mike, over to you.
Thank you for that introduction, Roger. Let's just go through today's learning objectives. It's to revise the disclosure requirements contained in the Insurance Act, to consider the insurer's response once it is in receipt of a fair presentation, to appreciate how the Insurance Act can be best used to ensure there is a mutual understanding of the risk at inception, to understand the difficulties encountered at the claim stage if the flow of information at inception is incomplete, and to consider recommendations for improvement. So let's go straight on to the section of the Insurance Act that we want to focus on, and it's part 4, or part 2, subsection 4. I'm not going to read this word for word, but I think everybody on this webinar will be familiar with the requirement that the insured has to make a fair presentation. And part A there refers to the need to disclose every material circumstance which the insured knows or ought to know. And I think during this webinar, we'll have more to say about what is a material circumstance. Quite often we find that when there's a dispute or a problem about a claim, and there's a suggestion that maybe there has not been a full disclosure, sometimes the debate goes no further than Section A, disclosure of every material circumstance. But there's a very important or at the end of that sentence, which takes us on to B. It says, failing that, disclosure which gives the insurer sufficient information to put a prudent insurer on notice that it needs to make further inquiries. And this is what we want to discuss during this webinar, because we see plenty of discussion about Part A, and not a great deal of discussion about Part B. And we hope that you're going to find this helpful. So, Roger, we're talking here about material circumstance. What can we say to clarify what a material circumstance is?
Well, fundamentally, it's one which will affect the judgment of an underwriter. And this is, the big problem we have is, what is it that would affect the judgment of a prudent underwriter? When you're looking at a risk, an underwriter, and I'm going to rephrase this. The ultimate test for this is a legal test. And the way that it has been looked at by the courts over the last 100 years, really, is there are two things. There are the physical aspects of a risk, and there are what is known as the moral hazard aspects of the risk. And the object is for the insured or the proposer to be given the opportunity to describe their business, or let's not talk about consumer things at the moment, it's slightly different. Describe their business in a way that a reasonable person, i.e. an underwriter, can say, yeah, I understand that, I know what you do. And there's nothing in the disclosure that's deliberately hidden or suppressed. Now that's about as far as you can go, because you can't really describe something that you don't know. I can't describe a risk that any of you are handling if I don't know what it is. I can only describe my own risk, and if I would describe my own risk of our own business, I could probably do that in less than half a page of A4, and a reasonable underwriter would understand it. That's the measure. That's what we're dealing with.
And just to add to that, Roger, I suppose what we're aiming at, and perhaps we'll agree at the end of this webinar, is that we would like to see more opportunities for open dialogue, a two-way process.
One of the things that comes up time and time again in disputes, which is the world we live in, courts and counsel on the way to court say the biggest problem in our industry is the reducing incidents of dialogue. People no longer talk to each other, and there's virtually nothing on the paper trail, on the audit trail, that records a dialogue. But without a dialogue, you can't expect people to know what they need to know. And that is the reason, one of the reasons we're talking about this is because the incidence of absence of a dialogue is increasing.
Thank you. So what does a fair presentation look like? Well, Roger and I are in the privileged position that when we are looking at cases that are referred to us, we see a whole variety of different means of making a fair presentation. In fact, I remember before the Insurance Act, well, when the Insurance Act was a bill rather than an act, there was quite a lot of discussion in the industry as to how insurers and brokers were going to rise to the challenge of making a fair presentation. And I think I anticipated that we would see more templates that would be used by brokers to make sure that nothing was overlooked. In actual fact, although we do see that, quite often we don't. And quite often the basic facts are put over. Perhaps we have actually seen notes on the back of an envelope, haven't we? And nothing wrong with email as long as it's well organized. But equally, there's no point at all in the insured or the broker making a data dump. In other words, overwhelming the underwriter to the extent that he can't see the wood for the trees. So it's actually quite an art to make a fair presentation. And from my observation, quite often there's a concentration on the detail of the case, such as what are the sums insured, business interruption, periods of indemnity, liability cover, and what have you, but perhaps not quite as much attention paid to the description of the risk itself. What is the business doing, and what risks that are associated with that? So I suppose my comment is that sometimes we think the fair presentation is a bit thin. Roger, I wonder if you could help us here, if you could lead us as to what a fair presentation really should look like.
Well, yes, Mike, you're absolutely right. I mean, we see time and time again that the fair presentation of the risk that is submitted and the things that we see is nothing much more than a schedule of sums insured. And the eponymous question at the top, has anything changed in your business in the last 12 months? Well, if you ask that as somebody who runs a garage, he's going to say, well, what do you mean? What do you mean by anything changed? And this is the problem. It used to be all right, because if you were saying that to a chap and sitting in front of him, you'd probably get a pretty good idea and you can have the chat. But you put that on a piece of paper, it means nothing. Has anything changed? Yeah, I'm a year older, so are all my staff. Do you want to know about that? Is that material information? So what we've done is we've listed out a few bullet points of things that simply come up from time, well, actually virtually every time. The first thing is full details of what the insured wants to insure. Now, going back to what Mike was saying just now about we had expected templates to come up. Templates for this kind of thing would normally only be created by brokers. We wouldn't necessarily expect insurers to do it, because their template really is the proposal form or the statement of fact. And I don't think they should be required to do anything more in particular. Except, I would say this, if it's a particular class of business, and I'll just take one for example. It's in the leisure industry, and we've seen quite a lot of leisure industry claims in the last 2 or 3 years. I think it would be helpful if in the material that the insurer sends out, policy documents, advertising documents online, is to put into the leisure industry specialist type of insurance. These are the kind of things that interest us. These are the things that are important for us to know, and we would like you to include these in your fair presentation. Now, I can hear somebody saying already, "Oh, but I don't think the lawyers would like that." It's not really a matter of what the lawyers would like. It's a matter of what can the insurer do with the potential client to close the gap of the distance of knowledge and understanding. If you can no longer see your insured, your client, then what can you do to close the gap so you've got a closer meeting of the minds? And frankly, I've been around an awful long time, and I can't see any legal reason why you shouldn't ask that question or pose that kind of information. So full details of what the insured wants to insure is the number one priority. The next one is a description. Now, descriptions of business are often 2 or 3 words, and they mean nothing. We're going to come to one later on, which is the description of the business was quarry, 1 word. Now, the question is, what can you make from that? Well, we'll come back to that later, but not a lot as it happens. A full disclosure of bankruptcy. Now, most of you will know that there has been a plethora or flurry of claims arising from discovery at the time of investigation of a claim that excuse me, one or more director or associate director or senior manager, people connected with the business, have had some kind of county court judgment or some other past history involved in liquidation, bankruptcy, or whatever. Now, there's lots to say about this. In fact, masses to say about it, but the fundamental thing is, if you don't make sure that you've asked that question correctly, you're going to find it difficult to rely upon it. And a lot of work is being done on that, and we've been doing it, and I'll tell you in advance that it's probably going to be published in the next few months to give some guidance as to what would be a sensible kind of question to embrace all the things that we think the insurer is reasonably entitled to know, which is everything. The question is how you ask the question to embrace it. So that's a big issue. The next one is a full claims history. I can't tell you how many times Mike and I see things where the full claims history hasn't been disclosed. And one of the things that comes up in claims history is that the insurers discover that losses or damage has been sustained where no claim has been made. Now, we can tell you without any fear of contradiction, that is a material fact. And it's something that needs to be made known to an insurer prior to renewal, that you've had 6 mini fires or 3 mini break-ins or whatever. They weren't big enough to worry the insurers with, but it actually contributes to the profile of the risk. So it's important to remind your clients that they should keep a record of these incidents, because it needs to be disclosed. And if it isn't, it is grounds for voiding the policy ab initio. Full disclosure of losses. Oh, sorry, I just said that one. Every material circumstance which the insured knows or ought to know. Now, that is a phrase. It's a wonderful phrase, isn't it? Well, that's why we're here, because nobody can really say exactly what that is, but it does require a level of inquiry of the insured. And if you're a broker or an insurer, if you're a broker, it's absolutely your duty to do that. If you're an insurer, to be helpful to the client, in other words, to help to re-engage trust with the client, you can do nothing better than to point them in the right direction of the things you're interested in. Mike?
Thank you. Well, let's look at some examples. So the first one here is a property owner's insurance, and they applied for buildings insurance for its premises that was let to and occupied by a local community association. The policy was a standard property owner's insurance shown as being occupied as a community centre. Sometime later, the premises were badly damaged following flood, and a claim was submitted. The claim was repudiated on the grounds that underwriters asserted that they would accept a property owner's risk of a community centre, but they would not have accepted the risk with an occupant of community association. So what about the proposal process? Well, the insurance broker had approached a wholesale broker who was acting with authority to place risks on behalf of the underwriters. As reflected in the policy schedule and the statement of facts, it was declared that the trade tenant was community centre. There's nothing about the proposal stage that indicated that the term community centre had any particular meaning. Neither was there any warning to the effect that an occupant operating as a community association would not have been acceptable. So the insured disclosed the occupation of the tenant via the wholesale broker's drop-down box. This is the first issue, the use of drop-down boxes, because I think we all experience irritation where we're trying to put an answer into a form, not just insurance forms. And the drop-down box, which is supposed to give us a series of helpful alternatives, never quite fits the bill. And so that's what went wrong in this case, because the insurer complained that it was a misrepresentation of the risk, because for reasons that we don't entirely know, they didn't want to insure a community association. Now, we think it might be because there would be a connection in the insurer's mind that a community association may well have links to activists or something of that nature. But that's entirely up to the insurer whether or not they accept a community association. In this case, they decided that was a risk that they would not have taken on. So because they complained of a misrepresentation, the policy was voided. They said they would never have taken the risk on, and the claim was declined. But it's interesting to note that on the submission of the inquiry for quotation, there was no question asked by the underwriter, and we'll come back to look at the implications of that a little bit later on. Example 2, this is the one that Roger referred to briefly before. Actually, the business description was a little bit more than one word. It said quarry and landfill site owner. So they affected its liability insurance through its broker, and the risk was presented on the basis that that was the business description, quarry and landfill site owner. Sometime later, a public liability claim arose out of the insurer's operation of some portable processing plant at a customer's site. The insurer repudiated the claim for damage to the third-party property on the basis that the cover only applied to liability arising from the activities shown in the business description. And this did not include the operation of processing plant either on the insured's premises or away. When the broker's presentation of the risk was examined, there was no reference to the processing plant, although the presentation did include copies of the company's promotional material, as well as a link to the website, all of which included prominent pictures of the insurer's extensive array of equipment. So again, we're not going to let you know the outcome of that just yet. We'll come on to have a general discussion as to how these cases ought to have been treated. Now we have another example, which perhaps you could take us through this one, Roger.
Yeah, this one concerns a portfolio of hotels They weren't top of the range hotels. They were sort of halfway down the hotel chain, if I can put it that way. But the insured, he owned quite a lot of these, and they're all in a similar region of the country. And one of them suffered a fire. It's one of the larger properties. Now, the seat of the fire was never conclusively identified because of the extent of the damage, but it was thought to have occurred in a third-floor bedroom. Now, the fire damaged 80% of the hotel, and it was estimated at the time that it's going to take at least 2 years to repair it and fit it out. In the course of the investigation, it was discovered that the hotel owner had, for the previous 18 months, made available a small portion of the hotel for social housing. So insurers sought to void the policy ab initio for misrepresentation of material circumstances, i.e. failing to disclose mixed occupancy in the damaged hotel for that previous year or more. And the point I'm just going to make to help you here is that that had gone through a renewal period, and therefore they hadn't told them at the renewal. Now, the insurers said that they would have insured a hotel with social housing, but only if it was specifically agreed in respect of each hotel. The insurers had insured that portfolio for 5 years, and long-term agreements have been in place. So there was some evidence of a continuity of relationship between them. But what was discovered again in the correspondence paper trail was that the renewals each year were largely by correspondence between the broker and the insurers. But after the first year, i.e. 5 years ago, no presentation of the risk was made or required by the underwriters. In other words, nothing in the form of a proposal form or a statement of fact or a presentation or a submission, nothing at all. The only thing that was there was a list of the revised sums insured for each location. Now, evidence that was being looked for was where was any reference to social housing. And the evidence relied upon by the insurers included what they called the usual figures required for annual renewal declaration purposes and for annual adjustments. But we found in it a reference to income from local authority contracts. So in fact, the insurer did know each year, or could have known each year, that local authority contracts, which is a euphemism for social housing income, was there. And it's a very, very good example, we think, of saying that had the insurer sought more or better information year on year and focused the mind of the hotel owner as to what they were interested in knowing, it was there all the time. They just didn't ask. And the hotel owner thought, well, I've told them once 5 years ago, they don't need telling again because it will all be on their records. That's the way people think. Mike.
So should these three claims have been paid? So here we have in front of us the section of the Insurance Act that we started with. Roger, starting off with the last example, the hotel. I'm wondering if it's perhaps expecting a little bit too much of the insurer to have spotted in the presentation that subtle reference to income from local authorities and to have drawn the conclusion from that meant by definition that they were using some of their property for social housing. What, and there's no right or wrong answer, I don't think, to any of these claims, but I suppose what we're saying is that because of the lack of dialogue between the insurer and the insured, or between the insurer and the broker, in other words, perhaps because this last section here on the slide is quite often observed in the breach, we feel that this just isn't helping to reach the clarity that's required.
Yeah, I think that's it in a nutshell, isn't it? It doesn't. There's a lot of claims. Now, look, we've got to qualify this. We're not seeing all the claims in the market. We're seeing those that get into serious trouble, but we get quite a lot of them. And there are patterns that we see. And one of the patterns that we're seeing is that there is an increasing reliance in the industry on the insured making a full disclosure as required by the Act. But there is no energy being put into helping the insured to know what he should say. That's the easiest way of putting it. Now, some people that we've had to interface with in the last year or so from the industry say, well, this is a trap. This is to entrap the insured. Does the industry really want to entrap its client base? Really? No, I don't think so. But I think it's an unintended consequence of the Act trying to be helpful and saying, look, this has got to be a two-way swing between the insured's duty and the insurer's obligations to make it, easy, if you like. And I think probably we've gone too far in removing obligations for disclosure of information like a proposal form annually in order not to frighten clients away from doing business with us, because everything is about speed and efficiency and cost. But actually, the cost equation on this, if an underwriter might actually like to tell us this, but if you take a disputed case of a claim, shall we just say for £500,000, 300, 400, 500,000 pounds, which is not untypical, and look at how much it costs to deal with the dispute of that claim over something like this, in comparison with how much it would cost to direct the mind of the insured at the front of the contract to say, these are things we need to know. I think it could be a very persuasive equation. Mike?
Could I come back to the first example of the community association?
Yeah.
Was it a community association or was it a community hall? And the use of drop-down boxes. The way I would look at that one is that if the underwriter had decided that a community association would not be an acceptable risk, but they spotted from a drop-down box that there was a description of community hall, and so it was presented as a community hall, I would have liked to have thought that the underwriter would spot that and say, this is quite close to community association. I think I need to raise a question here to make sure that I do actually understand what it is that I'm being asked to insure.
Yes, the question is, are there algorithms in the system that will flag it up?
I'm sorry, from the insurer's point of view, that's not his problem.
No. Just a question.
I mean, if the industry, I mean, we all know that so much trading is done electronically now, but the way the algorithms are put together and prepared and used, they can't be done, in my opinion, in such a way that this second leg on this slide here is totally ignored. Because if it is, first of all, I don't think it's fair on the insurer. And secondly, it's probably not fair on the insurer either. Because if the underwriter is not completing his or her side of the bargain, then risks...
Well, it's not so much not completing their part of the bargain. I think that the point is, it's a horrible situation. I mean, we've got a client at the moment, as you know, that is very much in this situation. And obviously we can't talk about it here. But it is very much a situation where the insured said, if only you told me that was something important to you, we'd have happily discussed it. But nobody ever did. And it's a feature of this organisation's business. It probably represents no more than 15 or 20% of their activities, but actually it happened to be the one that's caused them the problem. And for donkey's years, nobody's thought about it, nobody's mentioned it. And let me just say this, because I think this is the right time and place to say it. One of the issues that we're seeing of more and more and more is that what was in the mind of the prudent underwriter has got nothing to do with the price of bread when a claim comes along, because underwriting and claims has been separated. Now, the insuring public don't understand that. They say, well, if I'm going to spend all my time making a fair presentation to an underwriter, and he's understood and accepted my risk, why is it he doesn't get a say in whether he pays my claim? And of course, a lot of the claims are now referred either to loss adjusters, claims managers, or lawyers, and they have a different interest in the advice they give because they're being paid for their advice by the insurer. And we sometimes have to, well, we do actually very often, we invite the insurer to have a say in this, and sometimes they consult the underwriter and say, yeah, you've got a point. In fact, quite often they do, because it goes to the heart of the contract, is that at the pre-contract stage, the insured is contracting with the underwriter on behalf of the company. And if they've said, yeah, okay, we understand that, is it reasonable for somebody who had no part in the assessment of the risk to say, but he didn't tell us this, and therefore you have a right to void the policy? And it's very difficult for an insurer, if they're being given legal advice or professional advice, to ignore it. And these things need to be reassessed, I think. Go on.
Very quickly, because I want to leave plenty of time for questions.
Yes.
On the second claim with the quarry, again, there were no questions raised by the underwriter following the presentation. And so therefore, it was not spotted that there was no reference to the portable processing plant.
Mm-hmm.
Now, I would see this as a less straightforward case compared to the community association, because we know that this was done through a broker, and you would imagine that the broker would have been discussing with his client the material damage cover for the plant itself. And the main problem really is it an inadequate business description. So it would very much rest on precisely what was presented to the underwriter as to whether or not he had been given an opportunity to perhaps identify that there was more information needed. But nevertheless, it's not helped by the fact that no questions were asked, particularly with such a brief business description. That one would like to think that the underwriter would have said, well, I note your business description, but what exactly do they do?
I mean, one of the questions you might have asked is, what do you quarry? It might be relevant.
Yes.
You know?
Better move on quickly, anyway, because it comes on to our recommendations. Just a couple of minutes on what do you think the insurer can do? What do we think the broker could do to help close the gap?
Well, I think we've probably mentioned some of that already. I think the fundamental issue here is lack of information. And I go right back to what I said at the beginning, that what is in a prudent underwriter's mind is never going to be something that an ordinary proposer for insurance is ever going to know. It's impossible, any more than an underwriter will know what's in the mind of an honest or dishonest proposer. You know, it's just impossible to know, and the courts recognise that. And that's, I think, one of the overarching weaknesses of the insurance obligation of everything you know or ought to know. It's fine. I don't think anybody would object to that. But what is it? Because the equation that comes out of there is the equivalent of a data dump, and we know that they're not acceptable. There are people who say, well, look, read all my brochures, read my website, I'll write you an essay, I'll even come and see you. But even then, something will be missed out from the word everything. Something will be missed out. And that, I think, is I think it's the industry's responsibility, not the law's responsibility. The industry's responsibility to try to close that gap for the good of our industry and the relationship we have with the insuring public.
Maybe one way to summarise
I'm old-fashioned.
recommendations is that for the insurer, we would encourage them to be a little bit more curious. Sometimes we identify a lack of curiosity as to what is being presented to them. And maybe from the broker's point of view, I think it might be useful if the broker, when making a presentation, made a point of saying to the insurer, here's the presentation, but please let us know if there's anything else you would like to know about the risk. And that's inviting a dialogue, I think, in quite a helpful way.
I think that is key. And I come back to this, this word dialogue. I can assure you that virtually every case I've had to handle, we're now talking about 300 cases that I've had to deal through the courts one way or another. Well, not always through the court, but up to. Sometimes most of them settle. But the weakness in nearly all of this is the absence of a meaningful dialogue, because everything is done in shorthand and not properly recorded. And it's hopeless when you want to go back and try and unbundle what was said and what wasn't said. And to a large extent, in our experience, when it goes into litigation, the benefit of the doubt is usually given to the insured unless there is any evidence of dishonesty. And actually, dishonesty is comparatively rare in the scheme of things. The equation that has come up quite a lot is the distinction between recklessness and oh God, I forgot the other word, Mike. What's that? Before the one that comes before
recklessness.
Sorry?
The difference between carelessness and recklessness.
Yeah, carelessness. Yeah, the difference between carelessness and recklessness. There's lots of discussion about that. I think it's pretty obvious what reckless is. It's less obvious what careless is. And the point is, if somebody's careless in making their proposal for insurance, should they get the benefit of the doubt entirely? I think that if you don't take reasonable care to, make a proper disclosure, then I think, you shouldn't expect the underwriters to pull out all the stops when it comes to your loss. And we've said that. I mean, we say that to people quite often. I'm sorry, but we think your claim has got no merit because you didn't do this, you didn't do that, you didn't do so and so, and you could have done. And
it's almost time for questions, Roger.
Do that. But let's do it now. Let's take questions now.
Just before we go on to the questions, we came across the CII textbook on insurance law.
Well, we haven't come across it. We've had it for a long time, but we're having to use it more often.
We discovered it, I should say. And there's a very helpful section on this very subject, because this is referring to the Insurance Act when it was first introduced as a new provision. And it describes it here. It says it sets out the duty of disclosure, and that it is complied with if the insured gives the insurer sufficient information to put a prudent insurer, in practice an underwriter, on notice that it needs to make further enquiries for the purpose of revealing those material circumstances. And then there's a very helpful comment put in here. This becomes like a game of tennis where the proposer provides certain information and the underwriter asks for further information until the underwriter has satisfied themselves that they have adequate information to underwrite the risk. So it's like a game of tennis. But the problem is, some of us are not playing the game. Let's have some questions.
Yeah, that's very good.
Okay. Are you ready for some of your questions now then? We have, as usual,
Charlie,
a lot of them coming.
Take it away.
Okay, great. So I'm going to start with a question that's kind of linked to the three examples that you were giving, just as that's the most recent thing we've discussed. So Georgia has asked, is the issue with the community association, community hall, the fault of the wholesale broker providing a system with drop-down fields for questions where not all options will be covered? Now, should we consider that all questions should be free text fields going forward?
I'm just trying to absorb the question by memory. I think the answer fundamentally is that sounds like a very good idea, because one of the objects of online transaction is to reduce frictional costs of and time of meetings and all the things that go with the history of insurance. But I think that if you don't give the proposer an opportunity to ask a question or to say something like, I'll give you another example. We had one a couple of years ago that was a laundry, but they ticked the box for laundrette because laundry wasn't in the list. And if there had been an opportunity to say, we're a laundry, but not a laundrette, the insurer might well have come back and said, we don't insure laundries, we just insure laundrettes. But they didn't. And nobody knew that it wasn't covered. You see, this is the problem, that if you don't have a decent kind of system with these drop-down boxes, a lot of people say, well, I've got that, I've got the policy, paid the premium, I'm insured. And they'll be telling lots of other people, in contract and suppliers, well, I'm insured. Actually, they're not. They're not insured from the moment that they've paid their money because they've ticked the wrong box and nobody's told them. And the fact that nobody's told them, I think, is a huge problem for the industry because, it's almost like a deceit, isn't it? We're not going to tell you you're not insured until you have a claim. That's the issue. Yeah. So I think that if she's saying, should the drop-down boxes have open text, which means they can say something when they're not sure, I think it's a great idea. I don't know what the logistics and cost of doing it is, but I think that's, yeah.
Exactly. Someone has actually commented, though, a fair point, which is computers can't cater for all variations, but a conversation can. So,
well, having said that, I like that comment, but that's not what they're telling us about AI, is it?
Yeah, absolutely. And funnily enough, somebody has said, can an AI system be a prudent underwriter?
That is out for the jury. I think that we've had some really interesting lessons about AI, and I attended a conference, a BIBA conference actually, where there was an AI expert who also knows an awful lot about insurance, and he said he doubts it in our lifetime because the variation on the themes in insurance is infinite, and somehow we have the capacity as humans to be able to deal with the judgment factors. And he hasn't, I really know nothing about AI that's worth saying, so not much point in asking me. But I think that what I would say is that if you move away from something where there is a meeting of the minds, I think the insurance industry is going to find itself in increasing trouble and actually end up with a different kind of product in 10 years from what it's had for the last 300 years. Because if you can't go back to the root of good faith in some way and that meeting of the minds, I don't think you've got the same kind of product. Sorry, Mike, I didn't.
I was just going to add, I remember a time when most insurance companies would have a counter that the public could go up to and present their requirements for insurance. And of course, the person at the counter probably wouldn't make any decisions. That was taken in the back office. And so the way I look at AI is that it gets you up to the counter. It gets you up to that point where there's an initial exchange of information.
Yeah, it's a good way of looking at it.
I find it very difficult to conceive that AI in itself could comply with the terms of the Insurance Act.
No, I agree entirely. At the moment, I think that's right. Next question.
Okay, so bit of advice. Richard has said, historically, I always visited every client for any cover. During COVID, he did contact works for a builder, including hired-in plant. Now, a claim has come from him for a hired-in dumper, which was in a minor road accident. Having never dealt with his motor insurance, is he at fault for not anticipating and questioning road risks cover?
Is who at fault?
Is he at fault as the person who is hang on, let me have a look. So
I think he means is
fault?
the broker at fault?
Yes, is the broker at fault exactly for
Well,
not
I mean,
anticipating?
the question of fault is not something you can say yes or no in a forum like this because they don't know the facts. But the point
Yeah.
is, if a broker is looking after a portfolio for a client, but not part of the insurance requirement, i.e. the motor section, then I think the most he can do is to say, would you like me to look at it for you to make sure that it fits in with everything else we're doing? And if he says,
Okay.
no, I don't want you to look at it, I don't think that really he could be found at fault for that. But I have to say I'll qualify that on the facts because till you know the full facts, and sometimes a lot of fact is stranger than fiction, I'm afraid. So you have to take that into account. But I think on principle, if he had nothing to do with the advice, probably be difficult to pin it on the broker.
Okay, lovely. So Leo has asked, the insured should not have to disclose publicly available information. Does the insured's website qualify as publicly available information?
Yeah, fundamentally, yes.
Okay.
I think just on the subject of websites, sometimes that can fall into the data dump category if there's a lot of information in addition to that supplied to the insurer.
Yeah.
But it is true to say that the insurer is expected to know what is out there generally. So information that is common knowledge must be taken into account by the insurer.
I think it's true. I mean, we had this conversation the other day, Mike, didn't we, about something that it's rare nowadays for businesses not to have websites, but it would be totally unreasonable for underwriters to be expected to look at every website that they're insuring. It's just not feasible. And I think the point is that if there is a website that's worth looking at, and sometimes they really are, because they're quite detailed. I was looking at one the other day from a contracting company, international contracting company, and I learned quite a lot from it that I would never have learned actually in a half day's conversation because it is such a big organization. But looking at the website, what it does, it gives you ideas, it gives you questions to ask. And so, well, that's interesting. I want to know more about that. And of course, some underwriters do look at them, particularly on the big risks. They will spend some time. But we're not looking at the big risks. They take care of themselves. They look at the ordinary stuff, the SME stuff, where nobody would really bother. But and the other thing that's often said about websites is that they're not really true representations of the business because they're to advertise. And advertising is not necessarily the same information as you'd put in a truthful proposal, fair presentation. So you've got to treat them with some kind of distance.
Okay, thank you. Now, Jason says, it's commonplace that a significant amount of customers are time poor. How are you seeing legal reactions around this? A prudent broker may press a client for information, but perhaps the client does not have the capacity or the will to spend the time they should when discussing their risk.
Well, that's a worldwide program, and I'll tell you what, I've been doing this for 50 odd years, and it's been the same throughout the whole of my career. Nothing's changed. It's not to do with today's environment. Is some people say, I haven't got the time to do that, do it for me. The best thing, and actually we get quite a few claims that come from that genre, quite a few disputes. The bottom line is this: there are two kinds of client that one could usefully do without. Those that don't spend the time and those that don't take your advice. And the only thing you can do in those situations is to make meticulous notes of what you've tried to do to help them and put it in writing and keep file notes. Now, I've got a case, or we've had a case rather, which is finished now, where a finance director of a very large company was intimidated by his board, and his board were three brothers and a family business. And he was intimidated by them. And every time the renewal came up, he told the broker, it's got to be cheaper, it's got to be cheaper, it's got to be cheaper. And eventually, they had a loss, a massive BI loss, massive. And they were underinsured by about 400 or 500%. But the evidence from the broker was, well, the FD had assured me every time I brought the subject up that in the event of a loss at this big premises, they would very quickly be able to relocate to the premises of so-and-so and so-and-so or so-and-so, both of whom were competitors actually, but they were confident, and that's what the broker was told. Now, this claim was monumental, and it went on for about 3 years, and we got quite deeply involved in having to help, one side. The broker had no record of any of the conversations he relied upon. They weren't recorded. They weren't properly recorded in the notes, file notes. Virtually every meeting he had with the FD was in the office and then out to lunch. We know that. We even got down to actually getting records of the invoices of the bills for lunch, to prove where he was and that he'd been with the client. There was no record of what the client had actually said. And this is the problem, because if you are intimidated by a client, then the question is, should I continue to do business with them? Because eventually it could be your undoing if you haven't got the evidence. Alternatively, and we've seen the evidence of this as well, there are some brokers who meticulously write to their client, not just with some quick thanks for lunch, I'll get the renewal sorted out, but actually almost verbatim spoke back to them, this is what you've told me, this is what I've agreed, this is what I'm going to do for you, this is how I'm going to do it, this is how much it's going to cost. Fantastic. Because it really does show that there's a dialogue. Come back to that word. Does that help?
Roger, can I just briefly add that there's no doubt that many applicants for insurance are distracted.
Yes.
Or just reluctant to put in the time. And I remember listening to a call recording of a consumer who was on the phone to an insurer getting quotes for their home insurance. And you could hear at the background, I think it was Coronation Street, on the television. So it wasn't, they weren't applying themselves to it. And where there's a broker involved, they can best help themselves as well as their client by, as you were saying, Roger, just putting in writing either the information that was provided or
this is what you told me,
the absence of information, or maybe even the absence of cooperation.
And this is what I understand your business to be. You see, one of the things that we have to do a lot, I have to give evidence quite often about what a competent broker would have done in a situation. And very often the answer is they would have said to the client, so-and-so and so-and-so and so-and-so. Because what they're doing is they're saying the broker will know more about how a client should describe his business than the client will. He won't know more about the client's business. But from the point of view, the broker's knowledge is unique in being able to translate what an underwriter will expect to know from what he gets out of his client as what the client would describe his business as. So, for example, going back to the quarry, a quarry and landfill site, what the broker would know is that the underwriter would probably interested to know what kind of quarry it is, what it's quarrying, and also whether it delivers or whether it's pick-up only, whether it has machinery that is likely to be harmful on-site or off-site. All of those things that an ordinary competent broker would, just do it like falling off a log. Before breakfast. I mean, it is just so obvious. Now, that is the kind of stuff, if you can get it in writing, get it recorded, that's where all the, that's what's needed. That's it.
Great. Good advice. Thank you. I'm going to ask one more question then, squeeze one more in for you both for time. Now, if the insured knows that the claim was clearly due to an excluded peril, which the insurer would definitely reject, should that still be disclosed?
Absolutely unqualified, yes. Now, I understand why that's asked, and funnily enough, it's come up twice in the last month on real cases, or combination of fire and vandalism, in fact. Both of the fire was covered, but they were only small fires, and the vandalism was excluded, or malicious damage was excluded. So the broker said, well, and it's actually said, well, we haven't got to tell the underwriter that because he knows he's insuring fire. If you're not going to make a claim, why would he be worried? Well, the insurer has now found out about this series of things and has voided the policy. And it's a big claim, seriously big claim. And the broker is wrong. I can't emphasize this enough. If it doesn't matter whether it's insured or not insured peril, if things happen which are causing loss or damage to a property or the subject matter of the insurance, it is material fact. It's a material circumstance. It comes under the moral hazard side if it doesn't come under the property side. Because if you were an underwriter and if you knew, and I'll give you an example, a really good example. This is, this again, is another real case. This was a case of a company that melted down plastic. It was a recycling company. They had 38 fires in the course of 12 months. Now, they weren't really fires. They were little bits of incendiarism, which had to be treated by the many systems that this company had in place to treat those things. In other words, it's an inherent part of the trade and the business that sometimes you've got spontaneous combustion, sometimes post-treatment, fires and whatever. And they had various types of equipment to detect it and to deal with it. And they did. But they hadn't told the insurer how often it happened. And when the insurer found out, when I had a really big car, he said, well, we're voiding the policy for misrepresentation, non-disclosure. So the point is that anything which affects the premises, damages it. And another example is flood, near flood, a case where somebody's property, the garden of the property was flooded 3 times a year on average. But the answer to the questions, has your house ever been flooded, was no. And when that came out and the water came up to within apparently about a metre of the house, quite a big house, as you can imagine, on the riverside. But what they hadn't thought about is the water had got under the house. It wasn't just the surface level, but all the water was actually getting under the house, which eventually caused subsidence. And the fact that it didn't come into the house was a bit of a bonus, but it didn't mean the damage wasn't there. And it's material information to know that my garden floods 3 times a year. Luckily, it hasn't gone over the sill of the house. So the answer to the question is, you've got to tell them. Really important.
Yeah.
And actually, it's a broker's job. It's a broker's job. We've all been there. It's a broker's job to say to the underwriter, look, what's the probability and chance of this getting any worse? I don't mind you applying terms which take into account this frequency of near miss if you will accept the risk. Perfectly reasonable thing to say to an underwriter. And he may say, well, I'll do it with a bigger excess or with something else. There's all kinds of things you might come up with. But you can't do this kind of thing online.
Yeah, of course. All right, thank you. Well,
I hope that helps. Michael, finished?
I think we're out of time.
Oh, are we? Oh, right.
Yeah, we are out of time, unfortunately. We do still have a lot of questions. So to all of our delegates, we will endeavour to get those answered for you. But really, just a huge thank you to everyone for joining us today, and in particular, Roger and Michael, who, as usual, have provided plenty of information that's created quite a debate. This session is available on demand as well, so please do feel free to share it with anybody that you think is going to benefit from it. And keep an eye out, because Flaxman Partners always have a number of webinars that are running with us that they create from membership. So you will obviously see Michael and Roger again. But thank you very much for everyone joining us. Thank you, Michael and Roger, and see you all soon.
Okay, thank you. Bye-bye.